statement, isn't it? Okay, well, you can tell me afterwards the truth, or I'll see it on your faces. That's the one thing speakers get to do, is notice whether or not people are telling the truth. We know how to do that, don't we, Cesar? Len, we know how to do that, don't we? You look them in the eye. Gentlemen, if you don't believe me, ask a lady to tell you how they know whether or not you're telling the truth. Ladies know this, don't they? They look you in the eye. So if you're not telling the truth, you might want to get that handled first before you try to do anything. Especially seminar selling. I don't do products. This is not a product presentation. This is an economic briefing, ladies and gentlemen. If you're here for that, you're here for the right reason. If you're here for a hot stock tip, I got one. Get the hell out. Get out now. And I'll give you the perfect answer. Take all the money you got that's in the market right now. And if you could have it in cash, instead of whatever it's owning, would you go out and buy the same stuff you own with all that cash right now? And if the answer is no, you answered the question for your own self. Get out. And I'll show you why. Would that be okay if I showed you why? Oh, well, I forgot to give you rule number one. Rule number one in my presentations is if you don't talk, you're not getting any of the information. So would you like to have me proceed?
Sure. Yeah.
I'm not going until I get a yes from every swinging person.
Yes.
I'm not here for myself. I'm here for you. By the way, if you hadn't noticed, this is how I give my seminars. This is how I talk to the people in the seminar. I felt the best way to show you my example of doing a seminar is to present one to you. Would that be okay?
Yes.
All right. That's why I don't take personal questions. It's not the place for it. I want to have that personal question. I'll give you an opportunity to do that. Today, you'll have it at lunch. When I meet with families, just so you know, they'll have an opportunity to do that if they give me the privilege of sitting down one-on-one with them and talking confidentially and privately with someone that has an education, not a license to peddle products, because they're tired of being peddled products. Don't you think that's true? Most of you? Why did I choose seminar marketing first? I'll tell you the who, what, why, where, when, how, and how much. Then we'll go. The who. I want to deal with people who have the ability to make changes in their lives, and I'm a part of that change. I want to help people do better. That's actually why I accepted Tony's gracious invitation to come here. I want to get better, and I want to help other people get better. Okay? There's nothing proprietary about what I'll share with you today. You can get it on your own. Spend some time practicing and studying, you'll get better. Looking for the next hot way to make a sale, I wouldn't advocate that. I know that doesn't work for me. I want to work with people who have the ability to make change. Well, they need to have assets, income, and money, and problems. Okay, so that for me, man, I better pick a market. You better pick a market, especially if you want to do seminar presentations. This is my example of doing seminars. I'm not here to impute any other style or method. I want to show you mine. It works for me. If you try it, I hope it works for you. I can't be the only person to have found this success in this method. That's why I want to share it with you. There are a lot of people need our help. However we help them, they need our help. There's 60 million people in America over the age of 65. They're affectionately called OFs. What's that stand for? Old folks. OFs. Old folks. It's an English alphabet presentation. It's okay. Just a little bit of humor. Okay. There are 100 million baby boomers, BBs. OFs are running out of money or afraid they're going to run out of money. BBs are hoping they don't run out. True or false? True. Well, then let's go help them. 160 million people, that's a pretty good target market. By the way, you can work with other target markets. There's 45 million Gen X, 75 million Gen Y. There's about 25 million Gen Z, and there are about 10 million of the millennials. That's it. All the other numbers you hear is total caca. You know what caca is? Okay, just want to make sure you know what caca is. But that's what you're getting. It's caca. Do the math. 60 and 100 is 160, yes?
Yes.
60 and 100, 160. 45 and 75 is 120. 120 and 160 is 280. Add 30 to that, add 35 to that, you're at 315. Check me out, U.S. Census Bureau. Population of America, 1 May, 315.7 million people. I'm not making this up. Why would I have to make anything up? If I tell the truth, and you know it, you're living it, you're breathing it, okay? Well, then we have a real problem in America because we got 100 people in 15 years going to retire behind all you OFs. By the way, I do seminar presentations to OFs. Most of the time they're fun. I get a few grumpy Gusses, and I dispense with them, okay? And I always have 1 or 2 know-it-alls, and they're real easy to handle. The people didn't come here to listen to you. They came here to listen to me. That really solves it. Because that's true. You'll not watch the headlines. The other people don't want to listen to that person. They came for their own agenda. I'm going to show that person how smart I am, and I'm going, fine. I bought them a free meal. They're probably not going to visit with me. Oh, darn. Target market. That's the who. The what. How about helping them do better? They're worried about income. They're not worried so much about taxes. They think they're going in only one direction. And what might that be? Down. I don't know what they're smoking in your neck of the woods, but it's not legal. They think it's going up. And they're worried that they're not going to have enough left after tax. You can help them with that, I think. It's going to take more than just a license to sell insurance products. It's going to take more than a registration as an IAR or RIA. Just telling you, those are just licenses. You need an education to help people, not the ability to have the licenses to sell them product. That's why they're failing. We failed them. And the who, what, why. Why? Here's why. You're in the middle of a perfect storm. Do we have extreme market volatility? Yes or no? Yes. Do we have Islamic terrorism? Yes. Please notify the White House and Congress. Do we have a depression economy? Yes. Oh, yes, we do. We are not in recovery. We're in denial. This is not a debate. You do not want to debate that with me. And I mean it. And I'm telling my audiences that, and I'm telling all of you that. 20% plus real unemployment, yes or no? Yes. Yeah, it's about 23.6. Massive debt bubble, yes or no? Yes. Absolutely. I'll show you a slide in a second. You can get this, provided you're nice. And provided Dunhill thinks it can be of value to you. I leave it to their discretion, okay? And I didn't give you handouts because if you don't put any energy or effort into taking some notes, then it's really not of interest to you. Why would I want to put in any effort into that? Do you understand? I tell these people in my presentations, that's why they don't have a lot of handouts. If you want to be successful at helping people do better, tell them the truth. They've got to put some effort and energy and skin in the game. Do we have a bleak jobs picture? Oh yeah, and it's going to get worse. The old jobs aren't coming back. That's why unemployment's going up. Unemployment calculation makes it look like it's going down. You better tell people it's going up. It's going to get worse before it gets better. Because we haven't fixed the real system problems in this country. We have not fixed housing. I'll show it to you. We've not fixed unemployment. I think most of you know that. Until you fix unemployment and housing and the debt bubble, we're going nowhere, except further into debt with the policies that are being used right now. You better help people protect their assets, ladies and gentlemen. I need your help. I can't serve all of them. I'm not trying to. But we're not competition. We're colleagues. We have to get over that. Oh my God, if I share a secret to you, what's your name?
Dave.
Hi, Dave. I'm Alan.
Nice to meet you.
Where do you live?
San Diego.
Oh, really? I'm in Phoenix.
Are you really?
Yeah, we can shop.
Yeah?
Yeah.
All right.
Do we have looming retirement? What do you think? Well, I'm betting 100 million baby boomers are hoping they can retire. Retirement is a notion since the 1930s. People didn't retire before that. How many of you know of a great-grandparent who died working? Yet it was the norm. It was the norm, or is the norm. Retirement is this notion I can quit working and live off of my assets and whatever income I have been able to generate. And then we created this notion that, well, if you didn't create it on your own, we'll create it for you if you contribute to it over time. Far too many people in America have collected more in than they ever put in. And now we're asking 100 million baby boomers to get ready to collect. And we're going to dump it on 120 million. Now you look like you can do math to me. Can you do math, young lady? Okay, this is a toughie. Do you think 120 million paying Social Security taxes on their wages are going to be able to support 160 million people collecting Social Security? What do you think? You're not even thinking about Social Security, are you? Bless your heart.
Okay. Daddy is, though.
You know, she should be, because they're going to fix it. They're not going to dispense with it. They're just going to change the program for the younger generations. It's coming. Well, then do a seminar on Social Security like Elizabeth is talking about and tell them how to do better. That's all you need to do. The last one, this is not a band. This is dysfunction in D.C. It's not a band. Is that going on?
Yes.
Oh, yeah. And it's going to continue. Okay? Top left, 14.7 was the debt burden in this country 2 years ago. It's now 16.9 trillion. That's the top left number, if you can see that. Can you all see that? Okay. 16.9 trillion. That's just U.S. government treasury debt. That's all that number means. That's not our total debt. That's why I got this slide up here for you. In the center does this have a red dot? Oh, a green dot. Perfect. 54.6 trillion U.S. total debt. Well, that's now 59.6 trillion. That's consumer debt. Credit card, home loans, mortgages.
Markers at the Bellagio.
Well, for you. That was Tony wanting you to know his level of debt. Oh, by the way, go down to the bottom. Here's our U.S. unfunded liability for Medicare, that's D, Medicare, prescription drug D, Medicare, and Social Security. That number is now $124 trillion. Unfunded liability in Social Security is calculated this way. What is your average benefit going to be for every man or woman if they live to expected life expectancy, not age 60, 75? The numbers being panned out there by the press and the media is just to age 75. Is it possible people in America could live longer?
I hope so.
Yeah. Where's the hope so person? I'm with you.
I'm planning on it.
We're doing a luncheon on that. Do the math. Just do the math in your head. 16.9, call it 17. 59, call it 60. 60 and 17, 77. Yes?
Yeah.
Okay, 77 and 123, 200. 200 trillion. Get your arms around 200 trillion. $1 equals 1 second. $1 million equals 11 and a half days. 11 and a half days. Do we have $1 million debt problem, or do we have $1 billion or $1 billion or $1 trillion debt problem? I'm confused because I can't get my arms around it. It's trillion. Holy cow, Nick. Well, if 11 and a half days is 1 million seconds, because $1 equals a second, then $1 billion equals 1 billion seconds is 32.7 years. $1 billion is 32.7 years. Wow. But we're in trillions. Holy crap.
33,000.
That means that we have 32,700 years per $1 trillion. Newsflash, we ain't never going to pay this debt off. It is going to be forgiven. It's going to be forgiven. It's happened before. Most of us just haven't lived through it. That's the truth. Most of it. Here's a way to really be ahead with older folks. Don't you in the room under the age of 40 try to do this. It won't work for you. You'll be penalized because you're younger. Believe it or not. As if gray hair or no hair is a sign of a real, true experience that can be helpful. But if you're over 40, I'd say over 45, and you work with older folks, tell them the truth. You're never going to live long enough to see this debt paid off. It was paid off when you were my age, at the age of 5. Because during the Great Depression, a lot of debt was forgiven. That means wiped out. Investors will be wiped out who have bought all the caca paper that's been sold as an investment. A lot of people have that kind of paper in their investment portfolios right now. They're called master limited partnerships and REITs. And the only thing you get with a REIT is yuck. It's a REIT yuck. Generates income? Yeah, right. What's it worth? No clue. You know what I mean? Help people may be aware of it. Help these people. They've been sold caca by other people. Now they're angry and hurt and very skeptical. You got to overcome that threshold. Then don't do anything but tell them the truth, because you won't get through. This is from FDIC. All you need to know is this: FDIC quarterly banking profile. You tell people, oh, this is great. We were having breakfast talking, right, Bill, about all the money in the bank, because I'm going to wait and see. I'm with you, pal. I hear it all the time. Wait and see. Was is past tense. They got money in the bank for past thinking, past tense. Help them look forward. Is that helpful? I hope. But watch this. Fourth quarter of 2012, there was $32 billion, almost $33 billion in the deposit insurance fund. That's its ending fund balance at the end of the year. By the way, Tuesday, the new report will be out for the first quarter of 2013. That's why it's not up here. It's not been released yet. Anybody can go to it. FDIC, quarterly banking profile. If you come down a little bit further, it says the estimated insured deposits. Wait a minute. Did you think it was estimated or for real insured? Answer the question. Money in a bank, estimated or real?
Had to be estimated.
Had to be estimated. Why did it have to be estimated? I'll help you.
The bank's not going to tell you.
No, well, no. Let me help you with it. I'll show you why it has to be estimated. There is no way on God's green earth that 33 billion is going to bail out 7.5 trillion. That's why. You'll get them out of the bank faster than a herd of turtles will. Get this one slide and help them. No, it's not insured. And by the way, the government actually types out the word estimated insured deposit.
Is that FDIC?
Quarterly banking profile. FDIC.gov. FDIC.gov. Then look for quarterly banking profile. You can print this off.
Say Cyprus.
Okay? We'll talk at lunch if you need to know more. I'm continuing. This is from the Bank of International Settlements. It's out of Europe. This is called the pigs. Portugal, Italy, Ireland, Greece, and Spain. The pigs. Notice that every pig is lending and then borrowing from every other pig, as well as this pig, that pig, that pig, that pig. If that's not a Ponzi scheme, then we're going to Germany, France, and Great Britain, and we're borrowing from them. Help me with this. Is Europe afloat, or are they dead in the water? They're dead in the water, and they're sinking, brother. They are going under. In fact, we could be. We very well could be. If we do not change, and that means we have to help people make a change. That's why I'm passionate about what I'm doing. The pigs didn't get fat in order to get slaughtered. They got stupid. I'm going to lend you and then borrow back, and then I'm going to borrow from them, and I'm going to lend you and then I'm going to borrow back. It's a Ponzi scheme. It's a promise to extend another loan. They're up to their eyeballs in debt. Don't go to Europe for a vacation right now. It's not a good time. Go somewhere else. It could be cheap. It's not going to be fun. You want to do cheap? Or do you want to do fun? What do you want to do? You're an old folk. What do you want to do? Fun? Don't go to Europe. Hey, well, gee, the airfare, the hotel, the package, my God, though, I can go for 14 days for $2,500. Really? You'll never leave your hotel room. They haven't collected the trash in Naples for 2 years. You go to England, the trains aren't running, nor are the buses. They're on strike. You don't want to go to Greece. Everybody's riding. You'll get caught up and probably never come home. It's what they tell the truth. This is happening. Europe is toast. They just don't know it yet or won't admit it yet. Oh, this is nice. This is from Yahoo Finance. You all know who Yahoo is, right? You know that Google is God. Yahoo is the deputy angel. If you look, this is 1994. Did we have a bubble in the 90s? Yeah, it started when interest rates were at 3%. The market went gaga with cheap money. Wait, there's more. Oh, bubble boom, dot-com bubble. Were you all alive and breathing at that time?
Yeah.
Okay, now remember, for those of you who aren't, you're old folks. I'm doing a seminar to old folks. Okay, well, I had a really good financial advisor, and they let me go all the way to here, and I lost 37% of my money. But it always comes back. Well, the Fed said, hey, lower interest rates to 3, let's go to 1. So they did. Remember when interest rates were at 1? 2000, June. Held it there for all year. Fooled with Mother Nature, held interest rates for 1%. Oops, yeah! Market went up. This time, where'd they all put their money? No, they didn't put it in the stock market. Where'd they put it? Real estate. All that fancy real estate. By God, I'm going to buy it and flip it. I'll own it for a month and make $40,000. I'll buy a bunch of REITs. By God, I'll have income coming out my ears. That's what they were told. Well, 3% market goes up, 1% market goes up, up, housing bubble. Oh my God, housing prices would never go down. Well, yeah. Federal Reserve says, 94, well, we lowered it to 3, market went like this. 2003, lowered interest rates, market went like this. Well, you know what? Let's go to 1/4 of 1%. All in favor say aye.
Aye.
Not excited about 1/4 of 1%. You get why people don't want to be in banks? First, it's uninsured. And second, it's past tense. And they're not going to make any money. And they want to keep it safe. The bank is the last damn place you want to put your money. And I hope you work with a bank in here. I'd love to have you at my table at lunch. That's going to be a lively conversation. Anybody with a bank? I didn't mean to scare you if you are. The market's gone up, but this time after TARP and the Obama bailout, that added $1.5 trillion. We got up here for about a year, maybe 14 months. Correction. Well, hell, we can't lower interest rates. Shove some more money out the door. That's not happening. The Federal Reserve does not have the approval or the legal authority to issue money. They do not issue money. They're not printing money. It's illegal. Only the Bureau of Engraving and the Department of Treasury can print new money. And they can only print new money to replace money taken out the circulation. Raise your hand if you knew that. Yeah, 3 people, 4. Are you learning some stuff? Are you learning some stuff?
Yep. Yes.
Well then, if you came for the right information, you're in the right place. But just because you know the right stuff doesn't mean you can still do the right thing. I'd like to interview for the job of helping. So just keep that in mind while we continue, okay? Is that all right? All right, here we go. We'll add 1.6 trillion on top of 1.5 trillion, QE1. Quantitative easing. Well, that made the market go up for about a year, then, well, we'll do QE2. What the hell? Another 600 billion amongst friends. It's just debt. Goes up for about 9 months. Can't call it qualitative easing anymore. Quantitative easing. People are beginning to get smart in America. They know quantitative easing means more debt. So now we'll do something that'll really confuse the hell out of them. We'll call it Operation Twist. Woo! What did they call it? Operation Twist. Have you been alive for the last 4 or 5 years? What the hell's wrong with you? Don't you dance? Operation Twist. Everybody will like it. Yeah, right. Another 300 billion. That lasted 3 months. Holy crap, what are we going to do now? How about 85 billion a month? Do the math, 85 billion a month is another $1 trillion. Our debt has gone up over $6 trillion in the last 5.5 years. True or false? True. It's all there. You can do a 5-minute presentation or 6 or 7 minute. People know it. And you go, and by the way, you were in banks and the stock market? Well, yeah, I had to make it up. Really? You gone nowhere for 12 years. You got one heck of a financial advisor. You don't need me. My people don't lose a dime. Now, some of you in the room can't say that. But I'm a dinosaur, and I'm a happy dinosaur, because I don't lose money for my clients. If they want to risk some of their money, take responsibility for it. Don't pawn it off on somebody, and then when they're making money, you're feeling okay. It's okay for them to get paid by you. And when you're losing money, because you took the risk, then it's not okay for them to get paid for selling you the same stuff. That's insane. So I don't want to get caught up in that argument. I just want to make money, and they make money, and nobody loses. What a phenomenal idea, Dave. Ha! By the way, for 9 years, I did this practicing so I could get really good. And for the last 10 years, it's enabled me to go to $1 Million Round Table, top of the table. That's where you meet really cool people from all around the world helping each other get better. That's fun. Anyway, that's a different subject. How am I doing? You okay?
Yes.
This is Obamacare.
Sure is.
And
only half of it.
And you think we're going to have really lower premiums? What are you drinking? Can I have some alcohol? I need something to wet my whistle. All right, tequila.
White lightning. That's what I
Oh, that's good. Private label. Thank you very kindly. Okay, well, if that's not working, let's go here. Housing is not in recovery. This is from the Federal Housing Administration and the Mortgage Bankers Association. Mortgage Bankers Association. This stuff's available. Just got to know where to go to get it. Is housing improving? Hello? No. Those are delinquencies and foreclosures all the way up till the end of the year. Whoa. And the red looks to be getting bigger as well as yellow, which means 90-day delinquent and in foreclosure. Let's go further. Oh my gosh. Oh, we're getting significantly better. We're in recovery. We're in recovery? Do you see how little the foreclosures are until about 09, and then it skyrockets? Look at the scope and magnitude of the foreclosures. And you had some yahoo sell you a REIT based on this? How do I get out of that REIT, Alan? We've got to sit down and investigate that. I don't know if I can get you out. Well, why? Because it's very illiquid. They didn't tell me that. Oh, man, I want to talk to you. This is subprime. Yeah! Are we in recovery in subprime?
Sure are.
Yeah, we are. And we're smoking again. It's okay, it's legal, it's for our glaucoma. This is VA loans. We're doing it to the vets. Special note. Any one of you who has been a vet, has a family member that's a vet, has a past family member that was a vet, and has served our nation, you have my undying gratitude and thanks, because that's the only reason I'm able to do what I'm doing and even be up here in front of you. And this Memorial Day weekend is for remembering veterans. Please take a moment to do that, would you? Okay. This is mortgage delinquencies on all kinds of loans. We go from 14.5% to 12%, and we're in recovery. We got a bunch of I can't say an I word. There's an I word I'd like to say. You all know it. It's IDIOT. I'm not permitted to say that, but I can spell it for you. That way I didn't say it right.
ID10T.
ID
10T.
ID10T.
Idiot.
I did not say it, correct?
I said it.
Okay, thank you. That's okay. But I want you to know, that's who we've got running the show, telling the media what message to put out to America, ladies and gentlemen. Recap. Are we there already? Not yet. Let me go back for a second. I gave you the who, the what, and the why. Let me tell you where to do this. This is where I do it. I used to do breakfast seminars. I moved to lunch. I did them in buffets. I didn't want to mess with a lot of it. I wanted them to be able to eat, sit down, and keep listening while they ate. I've grown to enjoy doing dinners. The numbers that Elizabeth had up there earlier for the cost of dinners, 10 to 11 grand per seminar campaign, very valid. Not for the ill-advised or the poor. And you better not just do it once. It's not a single-shot event. You need a budget. Huh, shocking. And by the way, do you run a house on a budget? Any of you? Would you please notify your congressman to tell them to notify the White House? We haven't had one for 4 years, and by September it'll be 5. Do you think we have a problem? We have a very serious problem. You better not wait around. You better take action. You haven't got a lot of time. I think you got 6 months to a year. Would you like me to show you why?
Yes.
Okay. I will, because you were kind and nice, and you all talked. You can share it. You can insult me. Go ahead and share it. What was the comment? I didn't hear it. I have a hearing disability from flying.
What?
I didn't hear it, no.
Okay.
It was
I like the way you went through the slide.
Oh.
Okay.
Look, prior to 2000 and the dot-com bubble, the business cycle in America was about 6 years. When you mess with interest rates, you mess with the business cycle. It's now about 4.5 years. March of 03 to October 07, 4.5 years. February of 94 to March of 2000 is 6 years. Will you trust me I'm telling you the truth, or are you going to make me go back and teach this to you? That was a question.
Yes.
You'll trust me?
Yes.
Thank you, because I don't want to have to take time to do that. But I can, because I've done the work. Business cycle used to be about 6 years from about 6 years from bottom to peak. It's not exact, it's just a trend and a cycle. And the reason it's a cycle is because it reoccurs. Fashion that. Now it's about quit it. Stop it. It's about 4.5 years. Last bottom was March 09, ladies and gentlemen. Hello. 6 months to a year. By the way, we're in bubble territory on the debt burden. That's coming up. They're going to play games with it through the end of May now, into June, maybe even to September. October 1's a new fiscal year for the nation. We got a real problem brewing, and more stimulus ain't going to work. Bailouts are over, stimulus is done. We're not in recovery. Europe's toast. China is just waiting to crumble. They're building infrastructure now because all the products they were building, no one's buying because no one's got money. Their export economy is toast, so now they're going to build infrastructure and improve the nation. They are building cities for a million inhabitants minimum, and they're vacant. They're building highways to nowhere. We almost built a bridge to nowhere. They're building tons of them. I'm telling you the truth. Most people don't know it because they can't get access to the real truth because the communist press keeps the truth from being let out. That's why you need to have access to research and information to keep up with this stuff. You cannot continue doing some of the same things you might have been doing in the past if you want to do better. You got to do more. You got to practice, you got to study. And Bill, you're absolutely right. You and Len, thank you for the conversation at breakfast. You got to read, and you got to get other people to understand they got to read. They just got to read the right stuff. Get them off Google. It's not God. Teach them where to go to get accurate information. Not the internet. You're their source. You're their browser. Take that burden off of them. Make it easy for them. That's why we're in trouble. The economy is in worse shape than we were being told. True or false? True. You can look it up. Bernanke gave a speech a year ago and said, we are facing economic destruction. I hand that out. By the way, Ben Bernanke is the chairman of the Federal Reserve. You OFs in the room know that, right?
Yeah.
Okay. Would you say that a man that's a PhD in economics from Yale and also Harvard might have a little bit of knowledge? Would you say that the chairman of the Federal Reserve Bank of this country might have access to all the data he would need? Would you admit with me that he's probably a very big financial insider?
Yep.
Okay. So answer me this. Why would the chairman of the Federal Reserve Bank, who has access to all the information, all the input, all the data, all the research, why would he espouse one policy for the country and do something totally different with his own money?
Self-serving.
That's almost what you call insider
Create
trading.
panic.
They don't want to panic or run on the bank because there ain't no money there.
Right.
That's why they raised the insurance limit from $100,000 to $250,000 to calm America. You better tell people they need about 6 months worth of cash at home and get the heck out of the bank, except for the debit card maybe, and I wouldn't advocate that. Where are you, Cesar? For that reason, I wouldn't advocate using that. We talked about that last night. Where's Michael? Michael, where are you? No debit cards for the room, right?
Absolutely.
Absolutely. Get rid of your debit cards, please. Talk to Michael. That's a real serious story, and it's going on around us. Most OFs and baby boomers pay for gas and groceries how? Credit card. Maybe debit card, but most of them use the credit card, believe it or not. Okay, whether they use either one, the credit card and the debit card are both liabilities to the issuer of the card, true or false? And if they don't think you can make the payment during an economic downturn, what will they do to your card? Raise your rate or cancel your card. That's a liability to them, whether you use the $10,000 limit or not. It's a liability. If they're afraid you're going to pay it, they'll cancel it or lower it until you pay it. Or they'll dump it off to somebody that'll beat you up on the phone and at your door trying to get you to pay it. The collection agency. But we're going to run out of cash and the ability to buy necessities. You better tell your people to have cash. And the only way to have pure insured money through a bank, credit union, financial institution called brokerage firms, or insurance companies, which of those three different types of institutions has the best track record? Well, then tell the story to the other OFs that you visit with. Remember, this is a seminar to OFs. Tell them. All right? It is not advancing for me. Can we have some technical assistance?
There you go.
Boy, that was quick. The stock market's disconnected from the economy. Again, you saw the slide, did you not? That's a valid slide. Anybody can get it. You can create your own off of Yahoo Finance, put in your own timeline. You don't need mine or anybody else's, but it's there. But you got to share it with people and show them what they need to be paying attention to. Trends are saying we're heading in for a correction, the market's inflated, interest rates are real low, better prepare for low interest rates for 3 or 4 years. If you get 1.25% on a fixed index annuity, just saying, if any of you OFs out there have a variable annuity, my heart goes out to you, we need to talk. But if you have a fixed annuity or have looked at them, what's wrong with this? They insure the money, you get a bonus for being a new client, and they'll pay you a fixed interest rate higher than the bank will pay you, and they'll let you have more access than the bank, and in 3 or 4 years you don't have to buy something new. You can now earn interest based on the market when it's really growing, because it's going to really crash first. What's 5% bonus and 1.25% for 4 years total? 9. That's about 2.5 a year for the next 4 years. Where can they get 2.5 today? Can't even get a government treasury. It's only paying 2.1. And it's fully insured. Just an example for any of you who might look at those fixed index annuities and go, oh, I don't want to buy them. Well, the reason they didn't buy it is because some guy was peddling it. Show it as a possible solution to a problem. I got some more. How you doing? You okay?
Sure.
Okay. Remember going to 8. We're going to take a break here shortly. Global competition is increasing. That's a fact. People are buying products from all over the world. They have a problem with returns. Haven't solved that one yet. You have a problem with customer service. Who am I talking to? Yeah, where are you located? Can I have somebody who speaks English? Anybody had that experience?
You call in.
There is an opportunity to help. It's now. Who, what, why, where, when, how. How? I'm doing seminar marketing. I can get in front of a lot of folks, interview for the position, share them real information, not to scare them, to wake them up. They can't stick their head in the sand. They've got to make some changes. How about letting me help you? The other people didn't even tell you this truth and sold you crap. I don't want to sell you anything. I want to help you get rid of the crap. If you talk to people in plain English, they'll love you. You use highfalutin terms, they'll think you're really educated, but they don't want to talk to you. They are afraid of you. They're afraid they can't have a conversation with you. They can't rise to your level of intellectual capability. So you don't have to stoop low, just talk in their words. That's all I'm suggesting that you might try. This has worked for me, ladies and gentlemen. This is Ben Bernanke's financial disclosure statement. It happens to be from 2010. Please note here, he's got a guaranteed annuity with TIAA and a variable annuity with PREF, worth about $1.5 million. It was worth more, but in 2010, this was right after the crash in 07, 8, and 9, hadn't recovered yet. You can get a copy of that for every presidential appointed position. I have it on all of the Federal Reserve governors. I have it on the entire cabinet. I want to know where they're putting their money so I can tell my audiences, why are they telling the country to do this with our money and they're doing this with theirs? Those dirty you-know-whats. Ben Bernanke's got $2.5 million, $500,000 in cash and $2 million in annuities. What's he telling us to do with our money? Oh, don't put it in the bank just because it's safe and gets a low interest rate. Put it in the market. Is that not what low interest rates are really trying to do to this country? Raise the market? Hello, are you awake? Take your pulse, check it. That's why they've kept interest rates low. They believe if they get people to put money in the stock market and raise the market, it'll inflate wealth back. People will borrow against that and go back into consumerism.
Where did he work before?
Bernanke? He taught school. He was on the board.
Hello.
Where was the former Secretary of Treasury?
They're all. No, Goldman Sachs is a division of the U.S. government.
Well, thank you very kindly.
And they all need to be biased.
Yes, sir.
Isn't low interest rates more self-serving than what you're saying? Because our debt is so large, the United States interest payments, as long as they keep the interest rates low, the payments stay
That's a
relatively
great comment,
low.
but that's what they want you to believe. And let me show you the answer. May I share that with you? May I share it with the rest of the room? What was the debt when they lowered interest rates to 0.25%? Say 9.8 trillion, because that's what it was. Okay. I knew you couldn't refer to your notes that quick, so I thought I'd help you. 9.8 trillion. Were we worried about paying off the debt? So if we lowered interest rates, what would we want them to do? Borrow more, and the only way they borrow more is if we lower rates, and if they borrow more, that instills consumer purchasing power, we hope. And the other notion is, if we keep interest rates low, banks will have to lower their product offerings, so will the other interest-bearing products. That'll move money to the market. The market will inflate. Let's move ahead 5 years. Has the market inflated?
Yep.
Have we also caused our debt to mushroom? We're in bubbles. Bubbles always burst. Wow. And now's the time to get into the market? No, buy gold. It gets delivered in 10 days. Who gives a rip? You can't eat it, you can't spend it, you can't exchange it. Well, it's inflationary. You're not going to see inflation. You're in a 3D world. Not three-dimensional, 3D. Debt, demographics, and deflation. Deflation's coming. How do you win the battle against deflation? You got money. And the only way you got money is if it's insured or in cash. Cash at home, cash in the bank to pay the bills, and you got insured money for real. You can help people do this.
Well, there's insurance companies that bailed the government out the first time. Oh, I said that out loud, I'm sorry.
That's okay. It's the truth.
It's from 1929. Okay.
You know, there's some great stories out there. You can tell stories to be successful at seminar selling if you like. This is what I do. I share people this and get into dialogue and discussion. By the way, I'm not going to show you that yet. True or false? You can take the loss on a CD off as a deduction on your income taxes.
Yes.
Who doesn't know? Be honest. Okay? Who thinks they know?
Say that again. What was the question?
What? You can take the loss on a CD as a deduction on your income taxes. I'm sorry?
Unless it's an IRA.
Wrong both ways. It's an adjustment to income, line 30 of the 1040. Look it up. It's in the workbook for the 1040. You can take the penalty on a CD as a dollar-for-dollar deduction against taxable income. Did you learn something new today?
Yes.
Okay, let's go to IRA CDs. Can you take the penalty on an IRA CD
No.
as a deduction? Wrong. You're thinking IRA. CDs, penalty, deduction. Don't think IRA, think CD. CPAs don't know this. It's not their fault. They're not taught tax planning. They're taught tax form preparation. That's what they're taught. Ask anybody. If there's a certified public accountant in the room, they'll tell you they did not have to take a course in tax planning to get their certification. That's not their fault. But people think that's what they're going to get from their CPA. Boy, that puts them in a real pickle. Time deposit. Write this down. Reg D. R-E-G-D. Regulation D is the handbook for the federal examiners who examine all banks in America. Google it, and then Google when you get there, check on time deposit. Who again? Regulation D. Reg D. You'll find it takes you to Regulation D. And you look up time deposit, and it takes you to time deposit. And when you get there, you find that where the depository institution pays all or a portion of a time deposit representing funds contributed to an IRA, KEO, or other retirement plan, according to the code, or to a 401k, when the individual for whose benefit the account is maintained attains 59.5 or is disabled, pays no penalty. You don't have to worry about the deduction. They're not allowed to charge them a penalty. How many of you know that there are people that you know have IRA CDs? You can get them out now. You can get them out, do better. Well, we're going to wait and see. The past tense, right, Bill? Get them out of past tense. Get them into future tense. Look forward. You can offer them a better rate of interest, can't you? You can offer them money that's really insured, not estimated insured, can't you? That was the reason I showed you the slide. I want you OFs to get out of the banks thinking you got safe money. You're at risk. I want to show you where to go. That's in there if you'd like. I have every client that doesn't do long-term care with me sign a letter that they're not doing it. That's all I did. I just typed out my own letter and said, you want to do it? No. Sign here, please. What's it say? It says you didn't want to do it. I have it on file. I don't want to sign it. Okay, would you sign right here that you don't want to sign it?
Exactly.
That's what it says. Signature was refused. Sign here. I tell everybody I'm a financial lifeguard. I've got a huge lifeboat. I've got room for a lot more people. You're welcome if you'd like to jump in my boat. you better be nice, and you better let me be the lifeguard and not to try to take over my boat, because we'll throw you overboard. How many of you would like to get on board my lifeboat? Great. When you leave, mark it on your sheet that you'd like to talk first about when you can get on board. Would that be okay? I hope I shared with you some things about how I do seminars. This is exactly what I do. It's how I do it. I try to engage with you as well as give you some other bullets in between. But I wanted to share with you what's working for me. It's just my example, ladies and gentlemen, okay? But it's helping me help a lot of people and have a lot of fun doing it, and I'm not in it for charity. It helps me provide for my family too. It's been a treat. Thank you very much.
Thank you.